quick hits, part of the show where I talk about three things very briefly that probably seen in the news, three things that I want to, I guess, just comment briefly on. And here we have all three. First one, Canadian firms are seeing better sales. Yes, if you can believe it. Sales are going up here in Canada from retailers. Consumer spending, again, a little bit more. But businesses are upset about U.S. measures. And that's what the Bank of Canada, central bank here, has said in a survey. They're upset because they're fearful that we're going to see some tariffs. Second thing that we've seen in the news recently, Trump bets on executive orders. Well, we've seen it in the news, right? How many executive orders did he sign just in the first 2 days that he was in office? Someone said just this morning to me, like 200 or something. I thought the number was a little bit lower. I think in the first few hours, he signed into, I think, 46 or 50 executive orders, different ones. We saw some of them on a previous illustration earlier on the show. TikTok off and then on again in the US. And for now, I guess it's on based on this idea that the president will figure out something to keep TikTok turned on in the US. So let's touch on our first one. Canadians are seeing better sales right now, but they're obviously fearful of tariffs. Let's go to our first illustration, and you can see the business sentiment has remained sort of subdued in 2024. You can see here, these are the percentage of firms reporting positive sentiment. And you can see that it is way down from 2022. Positive sentiment was around 60%. Now it's under 20%. And with obviously looming tariffs on Canadian goods being shipped to the US, that hasn't helped much. Our next chart here talks about business outlook survey. What does that tell us? Well, it tells us things are getting better, but still nowhere near where we want to see it. Still below average. And a bit of a complicated chart there, but if you follow the black line, you can see that the business indicator, the business outlook survey indicator, has definitely fallen from 2021 to 2024. It started to tick higher as we start lowering interest rates, or the Bank of Canada started to lower interest rates. That indicator started to move up, but still not nearly where we want to see it. The next chart here, these are firms that see higher risks ahead. And I know it's tough to see some of the wording here, but many businesses are saying that they see higher input costs. That's the middle bar in there, the third one from the left. You can see input costs, they expect to be higher, selling prices higher, domestic sales, they're seeing not bad, but most are still seeing a struggle there. Exports, also a bit of a struggle, which is third from the right. And I guess financing costs definitely sort of flatlining. You can see by the dots where things stand, and the dots represent the balance of the opinion. So these are businesses, their opinions. So they believe costs are going to rise in general. They believe that financing costs will sort of stay flat because interest rates are coming down. But domestic sales might start to slow, and selling prices and input costs will rise. And again, selling prices will rise because input costs are rising as well. Our next chart shows here that firms expect sales growth to improve from last year's low levels. Here you have it. Just if you look at the red line there, you can see that, there's the expectation of growth from off the low levels. But again, how will tariffs affect that? And so that's something that nobody knows. And we may not know, maybe until February 1st or sometime after, how tariffs will affect our sales and our growth in our country. The next point, Trump bets on executive orders. Our chart here that I wanted to show is one on oil. And one of the executive orders that he signed I guess right off the bat, was to make energy state of emergency so that he has the power to drill more. And you can see that price of oil got up to almost $80 a barrel, has started to tick down, with the United States talking about drilling a lot more. I've heard some people talk about Oil perhaps falling to as low as 60, maybe even below $60 a barrel WTI as the U.S. ramps up production. And uh, some people believe that they probably can't increase production that much more because they're already producing at over 14 million barrels a day. So there's a lot of talk back and forth. But recently, the president signed an executive order to call energy a state of emergency. But as I said earlier, signed a number of executive orders, which are, as you can imagine, being challenged in the courts right now by various governing bodies, by various institutions and individuals. So we'll see how everything pans out. But executive orders is what President Trump has signed over the last couple of days. Our third point and final quick hit is the one on TikTok. And probably for many of the children, the adults in the U.S., they realized that TikTok was turned off for a brief moment in the U.S., but turned back on once the president made mention that he's going to, again, through his executive orders, do a analysis on TikTok, suspend any ruling for about 75 days. Apparently, he has the ability to do that, I guess. And so TikTok is right now still available in the U.S. So there's our little picture here. Welcome back, it said on TikTok. Thanks for your patience and support. As a result of President Trump's efforts, TikTok is back in the U.S. You can continue to create, share, and discover all the things you love on TikTok. So we'll have to see where TikTok goes, and we'll see, in the coming, I guess, 75 days or so. We'll see if there is a suitable buyer. We'll see if the Chinese agree to let go of TikTok, and in some capacity, maybe a 50% buyer. We know already that the data is kept on Oracle servers in the United States, so that is not an issue, but we'll have to see how it all works out. So those are three quick hits that I think have been in the news, and hopefully some commentary on each has shed some light and some information on them further.